What's going on, Dividend Chasers? It's the Dividend Bloodhound here, back with another investing episode. Today's episode we're talking about trading 212 for beginners and 10 frequently asked questions that I see all the time from new investors on the forums. If that sounds like something that you're interested in today, then do please stick around after the intro and consider smashing that like button to get this out to help even more people, and consider subscribing to my channel as well, and even ticking that notification bell if you're feeling super kind. See you on the flip side of the intro. Question number 1. A frequently asked question is, how does trading 212 actually make money? Now, trading 212 has been around for a very long time now, and what I can categorically say is that trading 212 makes most of its money through the CFD side of its investing accounts that it offers. So I'm sure that you're aware that trading 212 offers an invest account, an ISA account and CFD. Now, the invest and the ISA side of things are completely fee free, and CFD is where a lot of traders go to obviously try and make money quicker than just regular investing. Now, this is where trading 212 makes its money through spread betting and people and interest that it offers, interest that it charges for leaving positions out open overnight, etc. In fact, it makes so much money from CFD that it has been profitable for 15 years, and yet it does not charge a single penny for its ISA or invest services. It doesn't even charge a forex fee of like 0.5% like many other investing apps that are out there, such as FreeTrade, for example. Why is the order price different to the price that you actually pay when the shares arrive in your account? So firstly, when you place an order with Trading 212, it goes to multiple brokerages and multiple financial institutions to try and get you that share for the very best price. Now, unfortunately, this does take a small amount of time, and as we know, when the market's open, stock prices can move very quickly. So in the time taken to do this, the stock price might actually leap up or leap down in that small time period. Therefore, you might pay slightly less for a stock, or you might pay more for it. When you place this sort of order, it is called a market order. So basically, you agree to buy at the best possible price that the market offers at the time that you buy, and you agree to the process that Trading 212 goes through in order to satisfy that arrangement. Now, you can combat this by using something called a limit order, in which you can actually set exactly the amount that you want to pay for a share in whatever company that it is. So if you want to pay $50, for example, or £50 for a share in Unilever, then that is exactly what you press on the limit order. Now, if the share price never reaches £50, then the trade doesn't complete. It will only trigger when that £50 is hit, and then you will actually get the share for exactly that price. It doesn't really make a difference if you're buying just 1 or 2 shares at a time, the market buy side of things. But if you're buying thousands of pounds of shares, having a limit order and a limit buy in place will actually save you quite a lot of money. Question number 3. Can you transfer shares between your invest account, your Trading 212 invest account, and your Trading 212 ISA? In short, at the moment, this is not possible. According to Trading 212 themselves, you can't transfer shares, even if you're staying within the Trading 212 account, from your ISA to your invest account, or vice versa. However, what you can do is sell those positions to cash and then transfer the cash within your account. So if you had £200 of shares in 3M, for example, in your invest account, you could sell them in your invest account, have the cash, wait for the cash to settle, and then transfer that money through the app into your Trading 212 ISA, and then rebuy the shares that way. However, in the time taken to do that, the stock price obviously might be a little bit higher or a little bit lower, depending on volatility and how long you leave it between buying those shares. Question number 4. Do you own the shares that you buy through Trading 212? Not quite as simple as you might actually think. So in short, yes, you do own the shares, sort of. You obviously make all the decisions using Trading 212 at your disposal to buy, sell stocks and shares in your own time, and you'll make profit on that, you'll make losses along the way, etc. And obviously along the way you will accumulate shares. However, you do not own the physical paper copy of that share, not that they exist that much anymore, but Trading 212 does act as the intermediary and hold the shares on your behalf in custody with Interactive Brokers. This brokerage is the largest in the world in terms of trades completed, and also manages well over $160 billion worth of assets, which is absolutely huge. Question number 5. Are there any fees or hidden fees associated with Trading 212? There aren't any direct fees from Trading 212 Invest or Trading 212 ISA, but there are stock exchange fees that you need to bear in mind when you start investing in the UK or the US stock market. Now here in the UK we have a 0.5% stamp duty charge that is leveraged against every stock listed on the London Stock Exchange. So whenever you buy a share or multiple shares, you will pay 0.5% stamp duty tax basically to the exchequer, because you're investing and you're wealthy enough to invest. These charges are not levied on ETFs, bonds and gilts. Very important to note that one, so you can get away with investing in ETFs without that sort of fee. However, you will pay a management fee within those ETFs, nominally about 1%. So you're actually better off, not by much, but slightly better off to obviously do it yourself, but there is extra risk in doing so. There is also a PTM charge, the Panel of Takeovers and Mergers. They're basically an insurance company that keeps an eye on what's going on in the stock market to make sure that it is fair essentially, and they charge a £1 levy on share deals that when you buy more than £10,000 worth of a company at any one stage. That is charged against every position that you ever buy that is £10,000 or more. On American stocks and the New York Stock Exchange, then there is obviously the dividend withholding tax that you need to take into account. So if you don't know what that is, you basically, for investing in US stocks, Uncle Sam has to take his share, and that is normally 30% of your dividend payment. If you fill in a IBAN form, then that tax is reduced to 15%, but there is no getting around that 15%. You have to fill that form in and you have to pay that 15%, unfortunately. So that is well worth considering when you pay and buy into US stocks. There is also a very, very small fee leveraged by the Securities and Exchange Commission over in the United States, and they charge 0.0000207% against the total value of your purchase, however much that is. So they take a very small snippet of every single trade that goes on, and they do exactly the same. They also monitor the stock market over in the United States. When you come to selling your shares on the US Stock Exchange, there is a FINVA fee to pay, and that is 0.0000119 times the quantity of what you actually sold. And always that will be a minimum of 1 cent. Now FINVA actually stands for Financial Industry Regulatory Authority. Sorry, I had to have a quick little look at my notes there, a bit of a mouthful. And they also make sure that there is not any sort of illegal manipulation of the stock markets in terms of buying and selling, and it's sort of an insurance policy over there, and obviously they need to have some money to do that with, so that's what happens every time a stock is sold. Question number 6. Can you lose money? You absolutely can. Yes, you can. Through poor investing decisions, you can absolutely lose money in your Trading 212 Invest account or your Trading 212 ISA. Now if you diversify your stocks and you make simple, sound investing decisions and you do your research, and this should not happen. But yes, essentially, if you buy a stock that for whatever reason happens to devalue by 50%, 60%, 80%, then unfortunately you lose that money. Now, it is well worth considering that you can never lose more money than you actually put in, and that is very, very important. So if you invest £100 into your trading 212 account in your Invest and your ISA, then that is the maximum amount of money that you can lose. Even trading 212 CFD tries to protect you from going into a negative balance and losing money. So if your positions are all used up and you're out of time and you have no more money to fund them within your account, it will send what is called a margin call to your account, telling you that all available funds have been used and expended, and to carry on you need to add more money to your account. If that doesn't happen, it will automatically close all your positions, so you can't lose any more money, and therefore protecting you at least a little bit, and therefore should not turn negative, so you can't get into heaps and heaps of debt. Question number 7. Can you remove a stock from your Trading 212 Auto Invest pie without actually selling the position, but still keep it in your portfolio? The simple answer here is yes. It is a little bit awkward and you have to use the import export feature, but it is definitely possible and available for you to do in your app at any time. If you needed any extra help, drop a question in the comment section below, or you can easily search on Trading 212 frequently asked questions under the Auto Invest section, and it will give you a step-by-step guide of how to do it if you get stuck. Question number 8. We're getting there, guys, nearly there. So can you transfer your ISA to another broker or provider? The good news is, if you think you can get a better ISA and a better deal elsewhere, then you can absolutely transfer your ISA to another provider without any fees at all, no questions asked. However, you will have to do this as cash. So any positions that you want to move over, you have to sell them to cash first, whether you've made a profit or a loss against them. Have the cash in your account, and then you'll be ready to transfer in cash only to the next ISA provider. You will also need to fill in an ISA transfer authority form with your new broker, and then you will need to send this to Trading 212, the address of which you can find on Trading 212's website. Or again, if you want it, I can definitely, if you comment below, I will find the answer for you and copy and paste it through for you. Question number 9. So, when are dividends paid and how long does it take? Now, I see numerous people absolutely furious with Trading 212 all the time because it takes so long for dividends to arrive in their account. Now, it's true that with Trading 212 Invest and Trading 212 ISA, it does take a few days for the dividends to arrive in your account after the dividend pay date. You also need to make sure that you own the stock before ex-dividend date. This is the date of which you have to own it. Otherwise, if you buy after that, then the company won't pay you the dividends for that quarter or biannually or year, whatever, and you'll have to wait until the next dividend, which could be months down the line. Now, the reason it takes a little while for the dividends to arrive in your account is through numerous accounting hurdles and legalities that have to go on before the money can be deposited in your account, and this does take a little while. However, sometimes it does take longer in some circumstances, and this isn't really something that's disclosed or known about by Trading 212. They can only say it takes a few days, sometimes longer, sometimes shorter. However, in Trading 212 CFD, interesting fact, dividends are actually paid on the ex-dividend date, which is something even I didn't know before filming and putting out this video. Last and final question, question number 10. Why can't you invest in stocks like NEO and other foreign stocks in your Trading 212 ISA? Now, this issue and rule really isn't Trading 212's fault. These rules are set by HMRC, HM Revenue and Customs, and Trading 212 can do nothing about them except abide by them. And recently a little bit of an uproar was caused when NEO, ticker NIO, was removed from Trading 212 ISAs and essentially auto sold, and investors were left with the cash and had to reinvest that elsewhere. And that is because HMRC has certain rules that must be abided by when stocks are invested in ISAs to get the tax benefits. To qualify for ISA status, the company must be registered onto a proper, legitimate, registered stock exchange. Now, though companies like NEO actually are traded through the New York Stock Exchange, they're actually listed off elsewhere. It's not too dangerous, obviously, because loads of people have got a lot of money invested in NEO. It is just a formality that to gain the tax benefit, it has to be in a legitimate and tagged to a legitimate source, a legitimate stock exchange. And with NEO and some of the other foreign companies, that simply isn't the case. However, the good news is you can still invest in these companies in your Trading 212 Invest account, and that really isn't a problem at all, apart from you lose some of your tax benefit for if you were to go all out and put 20 grand in NEO, for example, and you'd have made a 40 grand return by now or something ridiculous like that, and obviously that would be protected from tax, whereas in the Invest account it certainly wouldn't be. And that brings us to the end of the 10 Trading 212 for beginners most frequently asked questions. I really hope you've enjoyed the video, guys. I hope I've helped as many people as I can. If I've helped you, or you've managed to use this information to help somebody else, please give that like button a massive hit so I can get this video out to more people for the algorithm, and it'll really help the channel out as well. And consider subscribing to my channel as well if you haven't already. That would be absolutely awesome, and I hope to see you in my next investing episode. Catch you later.